Hello everybody, my name is Christian Charlo. Welcome to this market report. Today we're Wednesday, December 17, 2014. Today folks, we had the FOMC announcement, and following the FOMC announcement though, markets reacted positively to that. The tone is more dovish than hawkish, and the Fed kept the status quo. However, there have been some minor changes, such as that inflation pressures the Fed expects it to be lower because of the falling oil prices. And the Fed said something important is that they're going to be patient before actually considering a rate hike. What Janet Yellen said that was really important though is that they don't expect to have a rate hike in the next two meetings. So that is a signal that we might actually have a rate hike only in April of 2015. So because of the status quo, investors have reacted positively, and you see all indices, the TSX, the NASDAQ, the Dow Jones are all rising. So this is how the Chronicle is going to be structured today. First of all, I'm going to make a quick follow-up on the Chronicle I made last week about the consumer discretionary consumer staple sector. And I'm going to talk about the situation of the markets though. Where are we? What are the risks that are actually within the formation of the markets? So let's start. First of all, if we take a look at the consumer staple sector, since we made the Chronicle, the sector had lost its upward momentum. Right now, it's in a bearish cycle within a downward trend, just like a lot of sectors in the US. However, the stocks have shown you though, and the retailers, for instance, Children Place Retail, that stock has progressed really well. It did give a breakout. So far, it's a hold on that stock. And the personal products that will call it Palmolive, so far that stock is still within a sideways formation. So if you bought that stock, I think you should continue to hold on to it as long as it stays above $67. In the non-durable housing product, there was Procter & Gamble. The stock didn't move, didn't budge, stayed flat within a sideways formation. It's still a hold. The buying point is at 91.24. And then the food retailers, it was Roundy's. It did break out here. It did take about 6%. Right now, it's still a hold because the stock is just pursuing its upward momentum. Not yet in a situation to take some profit, but soon enough, around 475, it's going to be in a clear profit-taking opportunity. So what did this reaction create on the markets? We all saw earlier that all the markets rose. But is this a moment to buy? Well, technically speaking, no. Why? Because if we take a look at the S&P 500 though, we're still within a clear sideways formation. We're still within that bearish corridor. The index is stuck between its 100-day moving average and 30-day moving average around this area, which also corresponds here to the Fibonacci retracement of the 38.2% and 23.6% range. So this is actually a point that is interesting to watch, but not a point to buy the markets. Simply because what we'd like to see is to see a clear reversal of that downward corridor. Meaning we need to see the S&P 500 going above 202 points to actually confirm a bullish momentum, and that might be a better timing to actually open positions on the American markets or even on the resources sector on the TSX. We need to see that. So far, it's not what we have right now. We did have today several breakouts on the energy sector. But those breakouts, a lot of them have lost their upward momentum, such as Matador Resources, such as Callon Petroleum, such as Sunset Energy. But the thing is, if you're getting into those breakouts today, because several of them are breaking out though, what you have to take into account is that you need to have a medium to long-term horizon. On MarketGurus.tv, we've talked about it since the last few days, because the energy sector started a bullish cycle on the TSX yesterday, and today it is starting a bullish cycle on the US. Medium to long-term horizon, meaning that if you're opening some position on a stock like Sanchez Energy, normally your exit point would have been below 653. But if you have a medium to long-term horizon, you might be more patient and start to buy a stock like Sanchez Energy, be willing to slightly tolerate a decline below that support. It's a big loss potential because it's already taking 27%. So if ever we have actually the economy that is continuing to do well, of course energy stocks are going to actually perform well, because a lot of them are actually starting to be opportunities and bargains for a lot of investors who are starting to rush and buying the energy sector, because a lot of energy stocks are still generating cash flows and have been able to cut their budget, especially with the fall of oil prices. So I still think could be a lot of opportunities on the energy sector. However, the risk is because the S&P 500 is still stuck within that bearish corridor, within that sideways formation, there's still a risk that this downward trend here might be resumed, and the S&P 500 might even go further down, at least until 192.50. So this is why, if you're getting into those breakouts in the energy sector, you need to have a medium to long-term horizon, and do not expect to make quick money on those stocks, because in a lot of them, though, either we have reached the 30-day moving average, which is a point where we might have a pause. Same thing for Calvin Petroleum. So you have to slightly be more patient and have a medium to long-term horizon because of those reasons. So folks, that said, this was Christian Charlo for your market report. Next week, we're not going to do any chronicle because it's going to be the holidays. So for all the team at Decision Plus, we wish you a happy holidays. Today, the market situation is positive, but not yet clear enough to actually recommend to get into the markets, because we're still within a sideways formation on the S&P 500. So see you after the holidays on December 31st.